Good morning. This is Mike and Corey with today's Ankerstar Wealth Morning Show. Steve will be back later today, and just a preview that tonight we will be releasing our fourth quarter investor presentation. So you can either watch it live, which you hopefully have an invite to for the thousands that will attend. Maybe not, but and you could also get a chance to ask questions there. But if you can't make it, the good news is it will be sent out in recording. So today's topics, I'm going to talk a little bit about things that are big in the news, which we see something about a Google monopoly and breakup. Oh my goodness, it gives me flashbacks to AT&T many years ago. I'm going to talk about an article on HealthSpan versus Lifespan and the economic side of that. And then Corey's going to dive into the 10-year bond and some of the surprising movement in that so far since the Fed rate cut back in September. So, but before we get started, I must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So let me get started. Google is one of our core holdings. So, Google, Apple, Amazon, Nvidia. We got some core holdings that we believe are just fantastic companies. And when you see something in the news like this with Google, you're like, whoa, monopoly, breakup. That impacts a core holding. So of course we are diving in and watching this closely. And does Google truly have a monopoly? I know, I don't remember when I used to use the Yahoo search engine. There was a time. And then at some point I use Google all the time. If I just hit in my browser G, Google's coming up. So there's certainly a indication that the consumer prefers it, but really the monopoly side is how they work with other applications, Chrome, browsers, Apple as far as default search engines. That's what gives them a huge advantage. They're absolutely allowed to have the best product and the easiest search engine to use, in my opinion. But when they start going on these other things, this is what gets them in trouble, and we'll see where this goes. So in this article, they talk about as far as what the government's going to do, and this lawsuit started, I think, in 2020. And they're going to ask Google to do, I highlighted, do away with certain exclusive agreements such that it has with Apple, and then it allows other search engines to have a chance. And what I thought I would show is, let's just see how big Google search engine is. And just remember, the search engine, it gives you the consumer information. But what it really does is it generates revenue in the background, because when you click on something, some company pays Google for that click. Or when you go purchase something, some company pays Google. That's how they make money. That's how we, as owners of Google, make money. So we like that. We like that from both sides. But let's take a look at it. Now here was a search ad revenue share by company, 2023 and 2024. I found this out there, Google's actually lost a little bit of market share in this one, and Amazon's picked it up. So, which, guess what? That's another one of our core holdings. Yay. And Microsoft is a core holding as well. So I mean, it's kind of good that we're in all of these. So when Google loses market share, if they lose market share, some of our other holdings pick that up. But that was one thing. And then I like this one right here. Here's a graph over the last, 10 years, 9 years, and it shows market share of leading desktop search engines. And if you look at the graph, the blue line is Google. There's nothing shocking there. And if you kind of look really step back, it looks like it declines just a little bit. And if you look at the bottom, the black line goes up a little bit, and that's Microsoft, Bing. And Yahoo, I mean, I imagine back in early 2000 when I used Yahoo, it had a bigger market share. So Google definitely has a big market share, and where the government goes with this, I'm not sure. Really it's these exclusive agreements that get them in trouble. It's not, the actual consumer product is pretty simple, right? You open it up and it's just a you know, Google in the middle with a little bit of graphics. There's not that much to it. So what's the stock doing today? Because that's what kind of interests us a lot. And I'm looking at a 5-day graph here. Let me go back to a 1-day because it's not, you know, it's not good to see it sell off. It's down 1.5%. That's not a huge loss. But of course, when you take it across a $2 trillion company, 1.5% is $30 billion. Well, 30 billion, that sounds like pretty big. 30 billion is a mid-cap company getting knocked out of business. So when things move like that and you're this big a company, it can have an impact. So continue using Google. You know, there's places that we don't even realize we use Google, like as far as search engines on phones. We'll see where this goes. And it made me think back to the AT&T breakup, you know, years and years ago. And when they did split it apart and made some different companies, you know, you as a shareholder owned parts of all those companies. And if you held all of them, you actually did fantastic. Now, I don't know what they're going to do with Google. They're not going to split it into a whole bunch of companies. I think it's really just cracking down on those exclusive agreements. The other article that I saw that was very interesting today was lifespans are growing, but health spans are shrinking. What that means for your money. So lifespan, that's how long you live. We want that to keep growing. You're like, hey, that sounds good. I get to live longer. Yes. Health span is how long you live healthy. And we want that to go up too, but they're not. It's shrinking. So people are living longer, but those later years, they're in very poor health. And that is very, very expensive. So a couple stats from this. Since 1960, lifespan has went to 77.5 from 70. Wow, you know, it's up 10%. Yay, that sounds good. Especially if you're born after 1960 like myself, we're like, yeah, we get to live longer. But here's the financial side. You know, things, obesity affects 42% of US adults. And then right here, this was the key thing I saw. About 90% of the nation's $4.5 trillion healthcare costs are people with chronic diseases and mental health conditions. So these chronic health diseases that typically they begin early in life, usually some of it's hereditary, some of it's lifestyle habits. Think diabetes, think heart disease, think cardiovascular disease. As they get worse, they get much, much more expensive when you get old. So look at this one. If you're nearing age 65, you may not think of this when you're looking at your retirement accounts. The average 65-year-old spent $165,000 in out-of-pocket health expenses. That's key, out of pocket. That's not even the total health expenses because Medicare picks up some of it or maybe some medical insurance, but $165,000 out of pocket. So thinking about this, two ways to think about this. One is, hey, save more money because my healthcare is going to cost a lot more when I get older, and I'm going to be in poor health. I mean, obviously, saving more money and investing, that's what we do. Here's another idea: work on my health while I'm younger, so that I don't spend this $165,000. And that investment in your health now, which may not be a financial one, will save you financially later, so you can use that money how you want or give it to your heirs or whatever. So something to think about. This may be a call. Some people may say, oh, I'm not that worried about my health. I'm more worried about my finances. Here's where they intertwine. And this may be the motivation that says, okay, I'm time to make some changes while I still can. So with that, talking about things changing, I'm going to turn over to Corey. He's going to talk about the 10-year bond.
Thanks, Mike. Yeah, well, real quick, and I was very, very interested in all the Google information there. So it reminded me, I saw this chart from the great Joseph Carlson the other day from Qualtrim about Google's revenue by segment over these prior quarters. And you can still see, even though there has been a lot of chatter about Google's dominance, or how does the search business compete with these LLMs that are out there now, and are people using those? Well, year over year, Google's search revenue, of course, still a majority of Google's revenue is comfortably higher. It looks like from, low 40s up to high 40s. So probably just above 10% there. And then, of course, you could see those other segments too, with Google Cloud being the fastest growing, and not the smallest, but the fastest growing. So I thought that was interesting. And a wise man once said, if no one thinks you have a monopoly, well, then you might not have a good enough company. So I think, some people think it's a compliment. Google is being complimented in a stressful way by being called a monopoly. And we'll see what happens. All right, I wanted to show you a couple weeks ago, September 18th, the Federal Reserve did lower the overnight rate, that short-term interest rate, treasury rate. And what did we see? So this is not the short term. The Federal Reserve controls the short end of the yield curve. And as we go out on that yield curve, you get to the 10-year, 20-year, 30-year, and all that. But what happened to that 10-year? Well, the 10-year, instead of going down 50 basis points like the Federal Reserve did to the short end, the 10-year has actually almost gone up 50 basis points. So why is that? Well, there's a few different reasons, but one of them is that if we do not see a recession coming down the pipeline, coming down the tracks at us, then we can kind of accept a more normalized yield curve where if you go out 10, 20, 30 years, you should kind of be rewarded a little bit. And you should see a 10-year rate a little bit higher than the short end of the yield curve, because you kind of are locking yourself in for a longer time frame and taking a little more risk in that. So that'd be a little more normalized yield curve. And investors, in the bond market are supporting that idea that we really might just accept a truly more normalized yield curve. So one other piece of data came out, and that is, and let me zoom in here on the unemployment data, but that unemployment rate had been slowly creeping up month by month, and it kind of peaked here was that July, June?
August.
It looks like, I guess, July at 4.3%. That's what it says.
Yep.
I thought it was 4.2.
Nope, it was 4.3.
Okay, 4.3. And historically, as that unemployment rate has started to go up, it's hard to turn that ship around. But our recent data is kind of turning around, coming down to 4.1% at the most recent data. So, if inflation is low, that current inflation, and unemployment is remaining low, well, then that supports a normal yield curve and a healthy economy. So what do you think, Mike? I mean, it seems like maybe we will get that soft landing.
Yeah, so I mean, a couple things in play with the 10-year bond. I mean, as far as you're getting I think they call it an uninversion. It was an inverted yield curve where shorter term was paying more than longer term, which usually doesn't happen, or it's a bad sign. So the curve's uninverting. The other side on the unemployment that I always think is you're getting a couple demographic factors. I think the stats are 10,000 baby boomers retire every day. So you're seeing the labor pool decrease. A lot of times we've seen it in the last 3 years. Half of the new employment has been immigration. Whether that's legal or illegal, I'm not going to get into, but it's been caused by a lot of immigration, which we'll see if that gets cut down. But when you have more people retiring and less people coming into the country, your labor pool goes down, which means your unemployment goes down because they need the workers that are there. So we'll see all these factors play out. the soft landing, you know, and we're going to talk about that tonight. You know, the soft landing is in sight, and we got that minor volatility distraction of a presidential election coming up. So, you know, and I guess I'll just close with, hey, if you're listening to this and you're in Florida, you're down there, our prayers are with you, and you know, please stay safe, because I believe that hurricane is supposed to hit later today. So with that, thanks everybody. Have a good one.